All right, fellow traders and investors, Cecil Robles here, and welcome to Financial Freedom Fridays. This is the first episode, and I'm excited to have you on board today. Financial Freedom Fridays is going to happen every Friday at 9 a.m. Central Standard Time, right here with me. Usually we're going to have a guest on, but since this is the first time that we're doing this, I decided to go ahead and share a couple of market hacks of my own with you today. So it will just be me and you today. And I'm going to be sharing some tips and secrets that I've learned over my 12-year trading career with you, so that you can better grasp and understand exactly what you're going to be doing as a trader, what you're going to use as a trader to succeed. So I'm excited about that today. Now, if you aren't familiar with me, then let me just kind of give you a little bit of a background. I've been trading in the Forex market specifically for the last 12 years. I've also run an education company where we've trained literally thousands of traders from all around the world in over 60 countries. So I've been at this quite a while and still going strong. And so, hopefully you can learn something from me today that's going to help you on your journey. Now, Forex, if you're not familiar with it, I know we have, audience from literally all over the world and from all different types of backgrounds. But the Forex market, which is what I specialize in and focus on, although we won't just be talking about that necessarily in Financial Freedom Fridays, we're going to bring on our other guests, which of course specialize in other areas, some in Forex, some in stocks, some in penny stocks, some in futures, some in markets outside of the normal stock, future, Forex option type market, maybe in real estate, so on and so forth. But it's all about helping you gain financial freedom through alternative investments. Now, the Forex market is considered an alternative investment. It's not a traditional investment like a stock or a bond. It's an alternative investment. It's something that the wealthy have been using for many, many years to grow their wealth exponentially. It's kind of been the playground of the rich and famous, so to speak. Guys like George Soros, Warren Buffett even, and many, many others from around the world, maybe people you've never even heard of, but are billionaire traders from around the world, have actually tapped into the foreign exchange market. So Forex stands for foreign exchange. And what we do is we trade currencies in the foreign exchange market, currencies like the euro, the British pound, the US dollar, of course, the Canadian dollar, the Japanese yen, and others. There are more exotic currencies that you can trade as well. And then there are major currencies. So there's about 4 major currencies, and then there's some currencies outside of that. Any currency with the US dollar denominated in it would be considered a more of a major currency. So for instance, the euro US dollar, the pound US dollar, the dollar yen, and the dollar Swiss franc, those are all major currencies. Then you have the dollar Canadian dollar, the Australian dollar US dollar, and the New Zealand dollar US dollar. Those are all considered, in that major category, major currency category. So essentially, there are very few instruments that you're going to be trading. It's not like stocks and options in Forex. There's only a few instruments that you need to really pay attention to in order to capitalize on this market. So that's one of the things that I like about it. It's a great market because it's ultra liquid. It trends very, very well. You can buy and sell with the same amount of ease there is, whether you're buying or selling, it doesn't matter. There's always something to trade essentially. You can also start out with a much smaller account than if you were going with a more traditional investment like stocks or options. You would need a larger account unless you were trading like penny stocks per se. But even if you're looking at day trading, you still have to have the minimum $25,000 requirement, so on and so forth. So, you need to obviously have a little bit of capital to start, but you can start with less. So that's another good thing. Now, listen, if this is redundant and you're familiar with Forex, don't worry, we're going to get into some meat here in a second. But just kind of want to cover it for people who are maybe brand new to this and have never experienced any kind of an investment like Forex before. We're going to also get into the charts. I'm going to show you a few of the hacks that I use that you can use yourself after today to begin to look at the market and begin to see how all of these components work together. Now, in addition to being a Forex trader, I'm also an entrepreneur. I've been literally working for myself since I was 19 years old. You know, I've been an entrepreneur for many, many years. I'm a family man. I've got 3 children, beautiful wife, children. I've got a 12-year-old daughter going on 21, right? I've got a 9-year-old daughter, and then I've got a 3-year-old son. So we're pretty busy around here. But that's a little bit about myself. Now, the beautiful thing about what I have the privilege to do and what financial freedom has done for me is it's given me the ability to be able to work from anywhere in the world. That's what this business has allowed me to do, the trading business, trading the Forex market. It's allowed me to literally work from anywhere in the world. I mean, as an example, just between now and Christmas time, I'll be in India, I'll be in Las Vegas, I'll be in Orlando, and probably a couple of other places in between there somewhere. If you see my dog walking around, don't worry, that's just that's Blue back there, and she's friendly, nice dog, but she might be a little distraction to you. But she's back there walking around, and that's the thing. I get to work from home, so you know, that's another great benefit to what I do. You know, I work from home, get up every morning, you know, drink some coffee with my family, my kids, my wife, and see everybody off to school, and then get right into it, you know, in the day. So now let's go ahead and start to talk about financial freedom and the Forex market and some of the tools and components that you're going to need to be able to achieve that. So first of all, you have to have a little bit of capital to be able to start trading with. You don't need a lot. You don't need to day trade. If you have a full-time job, that's okay. I recommend that you keep your full-time job until you get good at trading, until you have kind of, you know, earned your wings, so to speak. I don't recommend you quit your day job right off the bat. This is something that, of course, takes practice. It takes study. It takes work. But at the same time, it can be very rewarding, because once you know how to do it, there's basically no stopping what you can do. You don't have to depend on the government. You don't have to depend on a boss. You don't have to depend on a 401k plan or you know, your pension. Can create your own financial future. And that's one of the great benefits of this, is that you put your destiny and where you're going in life in your hands when you learn how to successfully trade the markets. That's one of the great attractions to it, of course. So but it does take work. It does take study. You can't just wake up one day and say, well, you know, because I'm good at this career, or I'm a good engineer, or I'm a good doctor, or I'm a good lawyer, that I can do this as well, and it's just going to be like second nature to me. First of all, you need to educate yourself, just like you did when you were learning your current profession. Okay, so that's what you're doing here today, and what I hope I can do for you going forward in the future. So you have to educate yourself. That's really key. You have to work hard at it. You know, you're going to have to put in the hours to study. The other thing is, you know, you don't have to day trade the markets. You can do other types of trading, like end of day trading and swing trading, which we'll talk about, which I highly recommend for those just getting started. I don't recommend trying to day trade the markets. I recommend trying to learn the flow of the markets and the movement of the markets without having to sit in front of the computer screen and make decisions and push the button kind of on the fly to get in and out of trades. It's going to be a lot easier for you if you actually learn how to do it day trading rather, swing trading or more end of day trading rather than doing, you know, again, day trading. So that's another thing that I recommend you do. Let's go ahead and look at some charts, and then I'm going to go ahead and start talking about some of the what I call hacks. Basically, a hack is just simply, you know, it's something that you can use to gain an edge in the market, right? So, you know, we call them financial hacks. You can call them secrets, or you can call it gaining an edge, whatever you want. But it's basically some kind of a hack. It's like a cheat code, essentially, that you are able to use to gain an edge or an advantage in the market. So there's some tools that we use to do that. One of the tools, of course, is our charts. And in our charts, we are looking for certain things. So I've got the chart up right now. You can see it on the screen, and you should be able to see my mouse as well here. And I'll go ahead and put this little dot on there. That way you can kind of see the dot or the arrow. I think that maybe actually looks a little better. So let's look at some charts. This is the Euro, what you call the Euro US dollar chart. And this is a daily chart. And the daily chart simply means that each one of these candles, this is a candlestick chart, but each one of these candles represents 1 day of full movement in the market. So if I make the screen a little bigger, you can see those candlesticks a little better. Now, I like trading with candlesticks because the visual is just so clear. So I like using candlesticks when I'm looking to analyze the chart on any currency pair. There are a number of different types of charts you can use, anything from bar charts to Icon-Ashi to line charts to Renko bars to point and figure, Kagi. There's a number of different types of charts you can use. I like the candlesticks for the type of trading that I do, which is end of day trading and swing trading. And that simply means that I'm trading less often than if I were day trading. I'm trading on a higher time frame, like the daily chart or the 4-hour chart. So essentially the daily chart, again, is each one of these candlesticks represents 1 full day of movement. So in the Forex market, what we're looking at is, and there's different brokers that do different things, but what I like to follow is the New York time frame chart. So that means that when New York turns 5 p.m. Eastern Standard Time, the day rolls over. So at 5 p.m. Eastern Standard Time, the day would roll over into this next day. And then it just goes for a full 24 hours. So from 5 p.m. Eastern Standard Time all the way to 5 p.m. Eastern Standard Time, a new candle, a new day would open, and then the movement during that day would be represented in this particular candle. So that's a candlestick. For those of you that aren't familiar with charting practices, we're going to be mainly dealing with technical analysis versus fundamental analysis. Now, technical analysis simply means that we're looking for repetitive patterns within the market. One of the things that I'm a firm believer in is that human behavior repeats over and over and over again, and it's very predictable. Most of us are ruled the majority of the time by what is known as the lizard or the primitive part of our brain, which is where the fight and flight, the fight and flight emotion comes from, where fear and greed come from. Those types of emotions that are just the base human emotions that we've been, kind of pre-programmed to have for thousands of years. Those are the emotions that rule, the human psyche many, many times, especially when we're dealing with money and risk. And so it's important to understand that, because if you understand that, now you can begin to realize that there are repetitive things that happen within the market that you can actually take advantage of when you see those repetitive patterns and you see those repetitive things lining up. We're going to talk about a couple of those things today as we get into some of these hacks that I'm going to share with you. And they're nothing more than patterns. So technical analysis is all about patterns. It's all about price action. And that just simply means, what did price do during this particular point in the day? What did price do during this particular bar? So there are a number of different things that we can look at when it comes to technical analysis. I'm going to share a couple of the tools that I use today to help me kind of gain an edge in the market, like I said. So I use the candlestick charts. What you see on the screen today is actually an indicator that I use that I'm very fond of. It's a great indicator, and I wanted to share that with you today as one of the hacks that you can actually use in order to, again, gain an edge in the market, right? So here is the Ichimoku cloud. Most charting packages have this if you're trading with, say, MetaTrader 4. What I'm using here is called tradingview.com, and it's an HTML5 chart that you can basically pull up on any device your phone, your smartphone, or your computer, or your iPad or your laptop. It doesn't matter. As long as you have a browser, you can pull this up. And they have a number of different indicators in there. One of them is the Ichimoku cloud. And I love this indicator. It was developed back in the 1960s by a Japanese gentleman. And he essentially developed this as a way to determine the strength of a trend, to determine, first of all, which direction the trend was moving, and to determine the strength of the trend. And it's got several different components to it. It's got the cloud component, which is the most notable component. You can see the red and the green line, and then depending on where the market is relative to the cloud will depend on where the cloud is moving. So in this case, you can see the market relative to the cloud is below the cloud, and you can see here that projected into the future, the cloud is all red. This is obviously a down moving market, right? So we would have wanted to be selling in this particular type of a market. When the price action is above the cloud, you can see that the cloud is actually green. And this is projected out into the future. So you can see that it's projected all the way out here into the future. Even when price was here, like for instance, price is here right now, you can see how far the cloud goes out. So it actually goes out quite a ways here. This goes out to, the cloud right here goes out to, if you look here, to 1226. And that's because there are a number of different days that it's projecting into the future. So you can see, again, this is a downtrend. The other components are these lines right here. These are called the lead lines. So you have the conversion line and the baseline. So you have these lines right here that generally the idea is when this blue line is below the red line, that you should be selling the market. When the red line is above the blue line, you should be buying the market. Now, obviously, one of the other components in there is that you want price, if you're going to be buying the market, you want price to be above the cloud, right? Above this area, this cloud part. If you're selling the market, you want price to be below this cloud area, right? So when price comes below the cloud right here, and you see these conversion lines are already flipped over, you've got the conversion line here. The conversion line is the blue one. The baseline is the red one. When you have the conversion line, the blue line below the baseline, below the red line, then you'd want to be selling this particular market. So you can see here that price breaks below the cloud, and sure enough, it is it is the conversion line on the bottom, the baseline on the top. You would want to be finding a point in here somewhere to sell this market off. Same thing here. We had a little bit of a cross. Then it crosses back right here. You'd want to be selling this market in here. So that's one of the ways that we can determine how to enter and exit the market with the Ichimoku cloud. But one of the things that you want to do as a trader, one of the things that have made me successful over my 12-year career, is being able to have something that helps you to determine the trend. Because if you can trade in the direction of the trend, the majority of the time, you're going to be much more successful than trading against the trend. And that is a very, very important component. You can see as I back this chart away here, that it's much easier to buy the market when price is above the cloud here. Again, price is still above the cloud down here, even though the market has had quite a pullback. You can see that price is still above the cloud, and it's much easier to find a spot to buy this market. It's much easier for this market to go up when price is above the cloud. As it begins to transition and break some key points here in the market and goes back down and starts to trade below the cloud, now you can see it's much easier to start to sell it. Okay, here again, we're kind of in this limbo, but you can see the cloud is still red at that point, and you can see that as price again goes below the cloud, it's much easier to sell, to find points to sell this particular market. Okay, so that's one of the things that we want to do, is we want to use this cloud to help us identify the trend. And it's real easy. Basically, when price is trading above the cloud, you would be considered in an uptrend. When price is trading below the cloud, you would be considered in a downtrend, and you'd want to find sell points within this market to trade. If it's trading above, you'd want to find buy points in the market, okay? And you can do that very easily, again, by using some simple tools. One of the tools is the baseline and the conversion line. If it's trading below the cloud and the conversion line and baseline flop over, okay, then we would want to sell this market, like right here. It went above, we wouldn't buy the market here, but when it crossed back over right here after this day, we'd want to be selling this particular market right here. That's essentially the idea behind this particular indicator. And you can use this indicator on any time frame chart. You can use it on the daily chart. You can use it on the 4-hour chart. You can use it on any chart that you'd like. It's not really you know, a major thing to use it on any chart that you want. The other indicator that I'm going to put on the chart now is, and it should come up here in just a second, is called the Donchian channels. And Richard Donchian was a famous trader, and he developed these particular channels, and he essentially used these to make a lot of money in the markets. Now, obviously, it wasn't his only strategy, but it was a strategy that did make him a lot of money in the market. So if you're trading below the cloud, you would want to find a point where these channels, these you know, these red and green dots here that I have on the screen, known as the Donchian channels, when you have a lower one form, like for instance, you had a lower low. This is based on a 20-day low. So essentially the input is just a 20-day low. So it's measuring the lowest low of a 20-day period. So here we break that 20-day low. That would be an indication for us to enter the market. So a break below this low would be an indication for us to enter the market if indeed we were trading below the cloud. This is one way that we can do it, okay? And so using these simple tools and simple market hacks is very, very easy to do, okay? So again, when you combine these two hacks together, you combine the Ichimoku cloud, you combine the Donchian channel, which is measuring a lowest low out of a number of days, whether it's 20 days or 21 days or 22 days or whatever you find the most effective, you can begin to develop a strategy and a system that's going to give you an edge, okay? So that's extremely important to have tools at your disposal that you can use to, again, develop a system, to develop something that's going to give you an edge. Nothing works absolutely perfectly. There are times where you may be wrong in the market. So you have to have a full view, a full system, and you have to use proper risk management. That's really the key. If you're trading with outsized risk and you're looking to turn $1,000 into $1 million, you know, in the next few months, you know, chances of you blowing out your account are pretty high. If you're, you know, trying to be a little more conservative and actually do this for the long term, chances are that you can use some of these tools to actually make some money in the markets, all right? Now, another hack that I like to use, and this is actually something that you can do just about in any market, is the gap trade. I call this the gap trade. And this is something that I've shared before, but it bears talking about again because we've actually had a couple of recent examples here. So the gap trade is simply when the market opens. In the currency market, the market closes to retail traders. The brokerage houses close on Friday at 5 o'clock Eastern Standard Time. So the market will close today at 5 o'clock Eastern Standard Time. And then over the weekend, there isn't a weekend market, but that's generally only between the interbank market, right? So those are the banks that are essentially, you know, doing business, settling up positions, so on and so forth, prior to the market open. Then on Sunday at 5 o'clock Eastern Standard Time, the market will open up again. And sometimes that market has gapped down. Like in this particular instance here, you can see that the market gapped down. So it had closed way up here. That's where the market closed. So if you're looking at the candlestick, wherever the candlestick ends up, if it's a green real body, so this would be a green real body, if it closes up here towards the high of this particular day, you can see it's a green real body. This is where the market closed. Well, when the market opened on Sunday, look where it was. It had opened actually right here, and this is a red real body. So it opened, then price tried to go back up. It filled this gap here, all right? There's a gap here in the market that it filled, and then look where it ended up. It ended up right down towards the bottom. This would be a perfect sell opportunity right here. And so that's essentially what you would look to do. You'd look, once the gap gets filled, you would actually either sell this when the gap gets filled. So you would do what is known as a sell limit, where basically you're looking for price to rally back to the upside, and then you're going to get into the market when price hits a certain point going back up, and then you're going to get into the market to sell. Or you would wait. If you didn't get that gap, you would see what this particular candle pattern was. And in this case, it closed near the very bottom with a large upper wick, which is essentially showing us that there's a lot of downward pressure here. Now, one of the things that we always do is we put in a stop loss in place. We did that here on this particular trade. I actually took this trade. We did that here on this particular trade. We put the stop loss above these highs right here. Because if these highs get broken right here, this is a pretty good indication that this trade's not going to work out. So we want to find a place in the market where we see support and resistance. And if that resistance gets broken, this is the most immediate place of resistance in the market. If that resistance gets broken, then essentially it's probably a good indication that that trade was not going to work out in the first place. So we always have a stop loss in place. Now, you can see what happened here on this day. This was the 8th, really, they say it was the 9th because the day flipped over. So you can see here on the 8th, which was the U.S. presidential election, you can see what happened in the market. This is the euro dollar, and you can see this big spike here. The market went way up, and then it came way back down and closed right down here at the very low point. So what ended up happening here was we got stopped out, but that's okay because it's always essential. It's always very pertinent for us to have a stop loss in place in order to protect ourselves in case the market does something like this, very unexpected, and maybe this could have kept going the other way. Okay, we didn't know that because during a presidential election or certain types of announcements that come out that are very big announcements, for instance, like the Brexit that happened this year, the vote that happened in the UK, that causes very, very volatile times. So you want to always be prepared with the stop loss. You always want to trade with a lower risk around those particular times, or wait until the market settles down and determine what you want to do. In this case, it was worth us taking a small risk to see if this was going to actually pan out. Now, it did pan out. It did continue to go in our direction. And at the close of this particular candle would have been another entry point, another point for us to get into the market and go short. You could have also gotten into the market way up here, but again, it's very difficult to predict, that this market is going to continue to drop in that particular scenario. But once this candle closes, once this day is over, we have a pretty good indication because look, price shot way up, then it came way back down and closed right at the very bottom. And then you can see price just dropped off the map here over the last several days. Here is another perfect example of this gap trade. So again, this was on 11/14. This was the weekend after, or the Sunday after the presidential election in the U.S. So here's the 8th/9th. Here's the 10th, 11th. The market closes on Friday. On Sunday, it opens up and it's gap down again. So it closed here, it gapped to here. It filled that gap just about immediately, and then it shot way down again. And here you can see another day, price came back up, it rallied back up, came back down, closed at the very bottom with this big high wick. That's another indication that price is going to continue to go farther down. And if you look here, one of the things that we like to talk about is white space. Okay, so after this happens, when this gets broken here and the market gaps down again, there's a whole lot of white space in here. And what I mean by white space is to our next major support level, you can see how far down that is. It's so far down. Here's our support level. You've got a lot of empty space in here for price to go in order to get to another support level where it has a potential to reverse. And that's exactly what happens here in this particular case. It just drops. It drops like a rock here, all right? And these are the kind of trades that we want to look for, that we want to be in. This gap trade is really probably the most high reward or high probability trade that you can do as just a mechanical type trader. Anytime you have a gap within the market, you'll see this happen very often. Another example of this is the dollar yen. You can see again, here was that huge gap, all right, during the week of the presidential election. You would have gotten into this particular trade at the end of this day. You would have had a stop loss down here somewhere. But the thing is what happened was during the presidential election, it came down, gapped out. But if you're a smart trader and you're looking at the overall momentum of this particular market, when the market closes here and gives you this big long wick at the bottom, closes up towards the high, that's another indication that price is going to continue up. Now, in this particular case, we didn't have another gap like we did in the euro dollar, but you can see that again, it's just been a massive ride to the upside here. And again, we're looking for where is that next major point of resistance that we're going to find in this particular market. And you can see that we're coming right up into that right now, right here in this particular area. That's the next point of resistance within the market. So we're looking probably for this to, you know, at some point here turn around. Let me just kind of fix that a little bit. Some point here in the near future, we're going to have some kind of a pullback, and then we'll see what happens from there. But again, a couple of the tools you can use: the Ichimoku cloud, the Donchian channel set to a 20-day period, which means that basically you're calculating the highest high of a 20-day period or the lowest low of a 20-day period. You can see as we didn't have any lows and this begins to move up, that it comes back up. Then we had another low here, another low there. And then you can see these highs are just getting broken every day. So again, these are a couple of the tools along with the gap trade. These are a couple of the market hacks that I think you can use right now to begin to at least learn how to see these particular types of patterns line up and what you would do in certain scenarios. The other thing that I want to talk about is, what does the market have in store for us with a President Trump in the office now? Obviously not going to get political here about any of that, but because that's not my job. My job is to kind of predict what I think the market is going to do with a President Trump in the White House. And obviously it is a big deal, and we can see that right now, what's already taken place just in a few days that we've seen that happen. The dollar's obviously gained a lot of strength here in the recent week and a half or so. And you can see just the enormous amount of volatility that we have had. We haven't had really that kind of volatility since all the way back in, you know, July. So what I think my prediction is that the markets are going to be more volatile. We're going to see more big movements in the market than we have in recent years. We're going to see more predictable trends in the market than we have seen in recent years. And we're already starting to see the beginning of that right now. So I think this is a very exciting time to be trading the foreign exchange market. I think there's a lot of money to be made for those that know how to do it, for those that gain the resources, the knowledge, the tools to be able to predict and identify these particular types of patterns. I think that you can get financially free. You can make a lot of money over the next several years as the markets continue to remain volatile, and big opportunities where the market can move in this particular case 400, 500, 600 pips in a very short period of time, which of course brings in more revenues for your trading account. So I think that we're going to continue to see a very volatile time period during a Trump presidency. We'll see if that prediction comes true or not. Essentially, what I like to do now is, if you have not signed up to be on the regular list for Financial Freedom Fridays, you can do that right here on this page, directly below this video. There is a sign-up form, an image that says Financial Freedom Fridays, sign up. Just click on that. You can sign up for that after we're done here. The other thing is there's some tools and resources right here on this page that if you'd like to take your trading to the next level, I think will behoove you to take a look at those as well. So you can take a look at those resources right here on this page. The recording of this will be up directly after the show, so you'll be able to go ahead and rewatch this over and over again and kind of pick up some more nuggets, maybe some things that you missed the first time around, and I highly encourage that you do that. Also, go ahead and take a look at our resources below. I think you'll definitely benefit from some of those resources depending on your circumstance or situation right now. And we're going to be having these shows every Friday, live shows. Next Friday, we're going to have a special guest. It'll be the day after Thanksgiving, but we'll have a special guest on air, and I'll be announcing that this week. And then, of course, the following Friday as well, we'll be having a special guest on. I'll be doing that show from India, so that's going to be an exciting time as well. So with that said, our show for today is over. I hope you enjoyed these market hacks. Also below is my email address, and what you can do is you can actually go on to my email address and email me and let me know what you'd like to see on the show. So if you'd like to see a particular topic discussed, or if you know of an expert, somebody who has an expertise in the financial arena, who has a track record of success, a proven track record of success that you'd like to see on the show, go ahead and make that known to us so that we can invite them on and have them as our guests. We'd love to do that because, again, this is all about helping you become financially free and retiring rich. All right, so I hope you enjoyed it. Let everybody know about it. Share this page. Let people know about what we're doing here, and I hope to see you on the show again in the future. Talk to you soon.